cancer today. Visit us at lightthenight.org.
The best of Business Week, plus breaking business news every weekday afternoon at 2.
I'm Carol Masser. Join Paul Sweeney and me for Bloomberg Business Week. JJ Kinahan, Chief Market Strategist at TD Ameritrade on the markets. And the Paddle Diva joining us to talk about finding balance on the water and in life.
Bloomberg Business Week, this afternoon at 2 on Bloomberg 1130, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. Influential conversations from Bloomberg Television. Here's Emily Chang.
Now to our other top story, Lyft earnings. Shares of the ride-hailer popping on second quarter earnings results that beat estimates. The good news quickly overshadowed by the company's decision to allow shareholders under lockup restrictions to sell earlier than anticipated. Lyft announced its lockup period will end August 19th, which is when more than $16 billion worth of equity will become eligible for sale. I want to get perspective now from one of Lyft's earliest investors, Oceanic Partners CEO Tim Sullivan. And Lyft shares going into this, Tim, had been down 15% since the IPO. You knew about the lockup expiring earlier.
Yes.
Why are they doing this?
There is, and this was in the S-1 filing originally, but there's a restricted stock unit plan that is causing this lockup to be moved up from September 24th to August 19th. So it is coming off August 19th, and we're not selling. We're in it for the long haul.
Why?
I still, believe strongly in the management team. The founders are doing a great job running the day-to-day, business at Lyft. Obviously, the numbers were phenomenal this quarter. I think Lyft's doing a great job of not only managing expectations, but beating expectations.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in London, I'm Anne-Marie Horder with this Bloomberg Radio Business Flash. European stocks are down across the board. The Stoxx 50 down 0.8%. FTSE, CAC, and DAX all lower as well. U.S. futures also pointing to a lower start this morning. We're seeing Italy really take center stage across Europe this morning as Matteo Salvini calls for these fresh elections, really pulling the trigger on the threats we've seen about breaking up the coalition. La Repubblica says that election could come October 23rd. Italian bond yields are surging, up 25 basis points, 1.788 on the 10-year for Italy. And the banks, Posta Italiana, a number of Italian stocks are the biggest losers on the Stoxx 600 this morning. Banco BPM down 7%. And across commodities this morning, I'm looking at gold. It has rallied above $1,500 an ounce this morning. Of course, this is a straight safe haven play. And then also in iron ore this morning, trading again below $90 a ton. A lot of supply seems to be coming in the markets, 87.90 a ton right now on iron ore. And in currencies this morning, we're seeing a safe haven play with a stronger Japanese yen. And the euro is slightly stronger against the U.S. dollar, 1.1193. That's your Bloomberg Business Flash. Here's Leanne Garrett with more watching this morning. Leanne, good morning.
Good morning, Anne-Marie. British Prime Minister Boris Johnson is urging the European Union to show common sense on Brexit. Johnson wants the EU to rewrite the divorce deal he says is unacceptable. Johnson says there's plenty of time to get a new agreement before the October the 31st deadline for leaving. The British Parliament has rejected the deal 3 times. Senate Majority Leader Mitch McConnell says gun legislation will be at the top of the agenda when lawmakers return from their August break. In the wake of several mass shootings, McConnell says the Senate will look at expanding background checks. Also on the table, so-called red flag laws to keep guns away from dangerous people. And the family plagued by a stalker's spooky letters mailed to their $1 million dream home in New Jersey have sold the 6-bedroom property at a loss. Maria and Derek Borders received terrifying letters for years, despite never living there. The haunted house is at the center of an unsolved criminal investigation. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Matt.
The Watcher House.
It's
they bought that. They bought that. I think they paid $1.4 million for that house in 2015 14 or 15. They never moved in. They spent over $100,000 on renovations. And then they sold it for like $925.
But when they started the renovations, they got all these spooky letters from the Watcher, signed from the Watcher, saying, "Have you found what we've left in the walls?"
Yeah.
And it's going to become a Netflix drama.
It's pretty creepy. Let's go and talk to one of these suspected watchers out of 731 Lexington Avenue. John Tucker joins us, getting ready to anchor Daybreak Americas. John?
I actually grew up in a haunted house in New Jersey, the Jersey Shore.
All right, so you're familiar with this story. This is a big story in New York, by the way.
Yeah, but they're going to sell the rights to it, so I wouldn't, shed any tears for them. It's probably going to look like a mini series.
I think it was probably pretty horrifying 5 years for that family. But what have you got ahead in terms of? There's so much going on in markets. Volatility.
I don't even know where
bad.
to start. But good news is it's Friday, right? That's where the good news seems to end. Let's do the trade tensions. They're not taking a break. U.S. holding off on easing Huawei restrictions. And, as you've been talking about Boris Johnson hurtling towards Brexit, as that happens, the UK economy posting a quarterly contraction, the first one since 2012. And how many governments has Italy had since the end of World War? This sounds like the start of a joke. Italy's sovereign bonds and stocks tumble as the government coalition there teeters. And Uber. Is it just a cab company that doesn't make money? We're going to take a look at their earnings. I know I support Uber, or at least my teenagers do with my credit card with Uber Eats. So,
also, earnings is a funny expression when you lose $5.2 billion in a quarter.
They're losings, I should call it.
It's got to be difficult to lose that much money. It reminds me of Brewster's Millions. He couldn't even spend the 30. Uber's doing a pretty good job of it. Anyway, John Tucker is up next with
Nathan Hager.
With Nathan Hager. I was good with Nathan Hager. John Tucker and Nathan Hager coming up. Daybreak out of New York if you're listening on Sirius XM. If you're listening on London DAB digital radio, you'll hear Bloomberg Surveillance with Tom Keene and Francine Lacroix.
Well, whilst we're talking about ways to lose money, let's talk a little bit about what's been going on in Europe over the last 24 hours. Jeremy Stretch, head of G10 FX strategy at CIBC, joins us. And
Good morning.
Good morning. You don't lose much money on the euro, it would seem, despite all the political tension in Italy. Do you think this sticks to the euro, this political, because it's sort of trashing Italian stocks down by 2.3% today. Banks weaker, of course, BTP yield spiking, but no, the euro is unmoved.
We are seeing the euro holding in relatively well, so it still seems to be pivoting around that sort of 112 threshold. I think in terms of Italy, we've been here many times before, as in the relation to that quiz question of how many Italian governments has there been since the war? Well, quite a few. And in a sense, technocratic governments are also not unheard of in terms of Italy. So whilst we have seen BTP spreads blowing out, they are still substantially below the recent highs. Yes, there are concerns about potential ratings downgrades, with Fitch obviously announcing a ratings review imminently. But I think it isn't necessarily going to be an overt problem for the euro per se, because, of course, we are still in an environment where essentially is risk-off. And in a risk-off environment, you do tend to find that those current account surplus currencies do perform relatively well. And, of course, that does mean that the yen, the Swiss and the euro all are likely to remain relatively well supported. So, for me, I think, yes, Italian political risk is something that we will continue to monitor and discuss, but I'm not sure necessarily this is the death knell of the evaluation of the euro.
It also amazes me that, you get 180 basis points return or yield on the 10-year on the BTPs. You get negative 60 for German bunds. And if you believe that savers are like desperate for return, why wouldn't they buy BTPs? It's not like the ECB is going to let Italy go bankrupt.
No, that's right. And if you actually scroll back to yesterday when we had the Japanese balance of payments data, we had Japanese investors being record net purchasers, admittedly a couple of months ago, but record net purchasers of BTPs for exactly that reason, that there is this attractive yield pickup. And we've seen this periodically when there have been episodes when things like Greek bonds have been the major outperformer, because the yield pickup has on occasions proved to be substantially attractive. And if we are in an environment where the ECB is going to be coming back into the bond purchasing backdrop in the course of the next couple of months, and assuming that Italy is not going to suddenly be removed from the basket because of a sub-investment credit rating, then we are going to continue to see a residual buyer of Italian paper. So I think that mitigates the potential blowout risks as far as
the credit rating is key. The credit rating is key. It's good reminder, because a lot of people are not allowed, a lot of institutions, funds are not allowed to invest if the credit rating goes below a certain level.
That's right. If you go sub-investment grade, then clearly there is going to be a very different dynamic in play. And of course, you could also argue that the fundamental problem in Italy is not the political risk, although of course it's a front and center issue for now, but it is the weakness of the financial sector. So that's a much more substantive and